Good day, welcome back. In today's video, we are discussing IAS 3 earnings per share. In particular, we are focusing on the calculation of earnings per share just after a rights issue. You remember that a rights issue means we issue new shares to existing shareholders, and we do this on a pro rata basis. It means that the number of shares you receive, it depends on the existing you already have. When the rights issue is done, it is usually to encourage the full subscription of the shares on issue. Imagine, for example, a company has got 1,000 shares, so it's intending to sell 1,000 shares. If we're going to sell these shares at $5 each, we would get $5,000, provided that all of them are bought. However, the shareholders might feel that this price is too high, therefore not everyone might buy. However, if these shares are sold at a lower price, let's say you sell them at $4 each. Now, someone is going to pay $4 for something worth $5. It means, therefore, that they are willing to pay because the amount they're going to pay is much less. That is the basic idea on your rights issue. Now, this concept of issuing shares at a lower price, it means that the shareholders will obtain a certain fraction of the shares for free. If they were going to buy 1,000 shares at $4 each, they would pay 4,000. You would not hear that under normal economic conditions, the 4,000 shares, it would have bought only 800 shares. That is 4,000 divided by 5. Effectively, the extra 200 shares which the shareholders got, they got them for free. These shares are called bonus shares. So in a rights issue, there are bonus shares. Because there are bonus shares, we need to gross up because bonus shares are treated as if they've been there at the beginning. If you are going to calculate the earnings per share after a rights issue, there are 3 stages here to go through. In the first stage, you need to identify the earnings per share. Once you've identified the earnings per share, the next step is to calculate the theoretical ex-rights price per share. This simply means calculate the average share price just after the date of the issue of the rights issue. We will use this number to gross up or to reflect the bonus element. Once we've grossed up our shares, then we need to determine the weighted average number of shares. With this weighted average number of shares, it means that if we combine it, if we divide earnings divided by the weighted average number of shares, we get our earnings per share. To calculate earnings per share, therefore, let's show that with an example. Blossom Gardens has been listed for the past 5 years. Extras of their financial statements for the year ended 3rd September 2024 indicated the following. Their profit after tax is $50,000. They would 40 cents ordinary shares, which are worth $20,200. On 1 May 2024, they issued a 1-for-4 rights issue at a discount of 20%. The market value of the shares on that day was $2.50. The funds raised were used to expand their return. Please note that the rights issue has already been recorded in the books. Calculate the basic earnings per share for the year. Now, to calculate our earnings per share, we know that we need to know our earnings. We also know that we need to know our ones. Now, our earnings here, it is quite straightforward. We are given our profit after tax. So the first step with getting earnings is not a problem for us. The next stage which we need is to calculate the theoretical ex-rights price. To calculate the theoretical ex-rights price, you need to reflect or you need to understand how many shares did they have at the beginning and how many shares did they have at the end. Now, in a rights issue, we use a fraction or a ratio. In this case, it means that we are going to get 1 share if you already hold 4 shares. We can use this information to calculate our theoretical ex-rights price. Now, if you already have got 4 shares, the 4 shares are trading at their market value. The market value is given here as $2.50. So 4 shares trading at $2.50. That is what you already have as an individual. If you have 4 shares, which are worth $2.50, in total, therefore, your shares worth $10, you just multiply. If you got these 4 shares, you're going to get 1 share, but the 1 share you're going to get it at a discount. The discount here, it is given as 20%. This means that you are not going to pay 100%, you are going to pay 80%. So I can go and say 80% of $2.50, you are going to pay each share $82. So you're going to obtain one share and you pay it $82. This encourages you to buy this share because you're going to buy it at a lower price. So 4 shares times $2.50, we see that their price is currently $10. And 1 share is $2. This means that you are going to pay $2. In total, therefore, you now have got 5 shares. The 4 you get at the beginning plus the one you just acquired. And in total, these 5 shares, they are worth $12. Therefore, the theoretical exercise price is found by saying 12 divided by 5. And this gives you $2.40. So the theoretical exercise price, we found it is $2.40. Once you've got the theoretical exercise price, the next step is to use this information to find your weighted average number of shares. Now, to calculate my weighted average number of shares, I need to understand what happens on the day. We know that this financial year, it ends on 3rd September 2024. On 3rd September 2024, therefore, how many shares did you have? We find it by dividing the value of the shares and the value per share. 26,200 divided by 0.4, I see that at the end of the year, I have 65,500 shares. But remember that for me to have those shares, I was having 4 shares at the beginning. I got a new issue of 1, and finally, I got my 5 shares. So 5 out of 5 is the equivalent of 65,000 shares. What was the opening balance? To get the opening balance, I would say 4 out of 5 times 65,500. I see that at the beginning, I had 52,400 shares. Now, when I'm saying the beginning here, what date am I? Remember that the year ended on 3rd September 2024. It means that the previous year, it ended on 3rd September 2023. 3rd September 2023 is the same as saying 1 October X3. So when the year started, the company had 52,400 shares. And they did a 1 for 4. That is, they issued 1 quarter of the new shares. 1 divided by 4 times 52,400. The company issued 13,100 shares. And these shares, they were issued on 1 May 2024. Now, I know that on 1 May 2024, we issued 13,400 shares. The next thing is to break down this year into the period so that I can calculate my weighted average number of shares with this information. From 3rd September 2023 to 1 May 2024, it means that we completed the month of October, November, December, January, February, March, and April. We completed 7 months. And between 1 May and 3rd September X4, it means we counted the whole month of May, June, July, August, and September, which is that we have got 5 months. Effectively, the company, it operated for 7 months on 52,400 shares. So to calculate my one-offs, I would take that 52,400. And because there was a right issue, I must gross up. To reflect my bonus share, I would take the current price of the fair value of the shares. I divide it by the theoretical exercise price we found in step number 2 on the top there. We saw that it was $2.40. So once I take that information, I go and multiply this number by the period. These 52,000 shares, they were only there for 7 months of the year. So 52,400 times $2.50 divided by $2.40, I multiply it by 7 months. I get 31,840. So this is the weighted number of shares in the first 7 months. Please note that after the right issue, the company now has got 65,000 shares. So I can say 65,500 shares. These ones, they operated for 5 months out of the 12 months. It's important to remember that these shares, they do not give an adjustment for the bonus issue. So we say 65,500 times 5 over 12, that gives you 27,292. Therefore, my weighted average number of shares is 31,840 plus 27,292. That is 59,132. Because I've calculated my step 1, I have my earnings. I've also calculated my step number 2, theoretical exercise price. I've calculated step number 3, which is finding my weighted average number of shares. With this information, I can now calculate my earnings per share. To have my earnings per share, I'll go and say, take your earnings, the figure in step number 1. In step number 1, we see that our earnings were given $50,000. It was straightforward. So I go and say $50,000 divided by my weighted average number of shares, which is step number 3. We saw that it is 59,132. Therefore, my earnings per share is 50,000 divided by 59,132. That gives me $1.01. That number can be rounded up, is $1.05,01. We often express our earnings per share in cents. And if I want to make it in cents, I'll multiply this number by 100. This means it will become 101 cents. If you wanted to put the decimal, 101.5 cents. With that, we're done with the calculation of the earnings per share when we're dealing with the rights issue. In the next lecture, we'll be discussing the calculation of diluted earnings per share. Thank you for attending. Looking forward to meeting you in the next video. Ciao.